Good morning and welcome. You're with us here on Business Today. Let's take you through all of the action in the corporate and financial world this morning as we count down to market opening. In just a few minutes from now, the Lal Street will open to the news of military action in Venezuela. Initial trends from Asia show markets have already discounted the news, with Nikkei, Hang Seng and Kospi all surging. There's not much impact on oil prices, but gold and silver trading much higher. Here's some cautionary news for investors. Even as the Nifty climbed nearly 200 points in the first two trading days of the new year, foreign investors have pulled out more than 7,600 crore rupees in this period. Donald Trump's Venezuela adventure could lead to more selling, with investors looking for safer bets. Public sector oil marketing companies in the spotlight, with news that more than $1 billion in dues from Venezuela could be unblocked after the US takeover. Easing sanctions could also reboot ONGC Videsh operations at the San Cristobal oil field, boosting output and revenues for Indian companies. Air India CEO Campbell Wilson could soon be ejected from the CEO seat. Reports say the top hierarchy of Tata Sons is growing impatient with the pace of improvement on ground and is actively looking for a replacement. Similar changes likely in Air India Express as well. Trump issues fresh warning to India on Russian oil trade, says US could quickly raise tariffs if New Delhi doesn't help, calls Prime Minister Modi a good man, but admits he was unhappy with India's oil deals with Russia. Donald Trump has threatened India with still higher tariffs. Addressing media on board the Air Force One on his way to Washington from his resort in Florida, the US president said that tariffs on India could be raised if it did not address its concerns on Russian oil imports. US tariffs on Indian goods are already a whopping 50%, and India has been gradually reducing Russian oil imports, which the US claims are funding the war in Ukraine. Here's what the US president had to say.
We put a 25% tariff on India for buying Russian oil. I was at the Indian ambassador's house about a month ago, and all he wanted to talk about is how they're buying less Russian oil. Would you tell the president to relieve the tariff? This stuff works. So I'm hoping we'll bring the bill up, and it's from 0 to 500. He picks the number. Nobody else does. But if you're buying cheap Russian oil, keeping Putin's war machine going, we're trying to give the president the ability to make that a hard choice by tariffs. I really do believe that what he did with India is the chief reason India is now buying substantially less Russian oil. So I hope we pass this bill soon. And after
They wanted to make me happy, basically. He wanted to, Modi's a very good man.
Yes.
He's a good guy. He knew I was not happy, and it was important to make me happy. They do trade. And we can raise tariffs on them very quickly, and it would be very bad for them.
Breaking news on your screens now. A bull run continuing in precious metals. No, pause coming in there. We've seen a continuous bull run over the last couple of weeks of 2025 and now into 2026. MCX gold, silver opening with a strong uptrend. MCX gold jumping 2,000 rupees to 1.37 lakhs per 10 grams, and MCX silver surging 10,000 rupees to 2.43 lakhs per kilo. That's the latest on the prices with regards to silver and gold and what's happening on those precious metals. Clearly, it's really been all glitter when it comes to gold and silver, and no letting up there. Remember, of course, given the current geopolitical scenario, there is going to be a fair amount of safe haven buying as well, and that's also driving up the bullion as well as silver this morning. We're joined by Shailendra Bhatnagar, Chief Analyst and Editor Markets, as well as Vineet Bulinchkar, Head Research Ventura Securities. Good morning, gentlemen. Shail, let me just look at the market setup briefly overnight and in Asia this morning. We're not seeing too much of a knock-on effect when it comes to what's happening in Venezuela. Clearly, the markets, A, are tracking oil prices, which are still relatively flat, and B, are possibly looking forward to prolonged optimism, the earnings season, and some of the kind of momentum that we've seen in tech continuing into the new year.
Good morning to you, Abha. A fresh week, and the last street takes guard amidst optimism all around as far as Indian markets are concerned. Very, very strong breakouts happening in sectors such as financial services, consumer durables, healthcare, and capital markets. Of course, momentum will now get better and better in the metal space. Remember, the action in Venezuela and across South America is also a game on rare earth metals, which are found across the border which lines America in South America. Therefore, strength in metals, which is precious, both gold and silver. Look at copper, look at aluminium, all of them are kicking start on strength, and therefore their derivatives in equities will make sense. So Hindustan Zinc, Hindustan Copper, the entire PSU metal pack, NMDC, NLC India, as also National Aluminium, all showing signs of strength. Capital markets is coming back, so is financial services. So Chola Fin, REC, PFC, and of course, who can forget the strength that we are seeing in MCX. Abha.
All right, Vineet, good morning. Counting down to market opening, and do you feel that current geopolitics are going to play spoil sport? It's looking pretty flat as markets digest the news. We've been really focused on what's happening on gold and silver, metals in light of that, and of course, counting down to earnings and the budget. Also wishing you a very happy new year, Vineet.
Yeah, wishing you the same, Abha. Couple of things that have happened almost in the last 24 hours is that Maduro government is gone. And, Iran is facing a kind of a coup from the dispensation of hard Islamists. So, that for a geopolitical reason opens up the gates for India. And, it's a very strong message. And if you see three civilizations, that is the Jews, the Persians, and India, are now forming a kind of a political clique, which will be very, very strong for and very, very good for India. Apart from the fact that, your oil prices, uncertainty over, your Venezuelan oil is through. I think things look very, very good, and we will be seeing low oil levels playing out over the next few weeks. So that is good news for India. India's economy is chugging along nicely, and a lot of things are settling down for us. So I think the markets will do well. The only caveat is what Trump will do.
It's clearly all about oil, and that's possibly keeping everyone a little bit on edge and tracking what's happening there. Safe haven buying, of course, going up. FBI is pulling out. So that's a clear trend. But when it comes to the capital markets, momentum seems intact. Optimism seems intact in terms of earnings and in terms of a continued uptrend. In terms of the Venezuela impact, remember, it will take time to actually develop some of those oil fields and boost production. So there's no immediate impact on those oil prices or oil supply. OPEC Plus has also decided to maintain supply right now. So we're not expecting any uptick in oil prices immediately. Oil and gas index is up because obviously OMCs are now going to benefit. And they're also hoping for some unlocking of dues coming in with regards to their contracts with Venezuela. Jeffries on the Venezuela impact saying that that Reliance may source crude now at $5 to $8 a barrel, discount to Brent. That will boost their GRMs as well. We'll pull up Reliance for you as well. They're seeing a medium-term risk on crude prices, seeing some pressure on crude prices. But overall, the potential U.S. takeover could lift sanctions on Venezuelan crude imports. And they're largely seeing this as a medium-term impact. So that's Jeffries for you on the Venezuela impact for India, saying that the U.S. takeover may lift sanctions on Venezuelan crude, and Reliance, ONGC seen benefiting from the Venezuela shift. Reliance may in fact get crude at a $5 to $8 discount per barrel, and the discounted crude could actually boost Reliance GRMs. ONGC may receive $500 million in unpaid dividends. There's a medium-term risk, higher Venezuela output that we might see in the medium term. Revived supply may pressure global crude prices. So those are some of the potential implications of what's currently happening in Venezuela. And meanwhile, as we just discussed, Trump still putting pressure on India with regards to importing Russian crude as well. So lots of shifts that are currently in the works, and we'll be continuing to track those for you. Meanwhile, let's go back to the market opening trade and see really what stocks are standing out. We're just flat on the index. But Shell, in terms of movers and shakers, what's catching your eye on opening?
Well, Abha, it's the PSU setup that's doing extremely well, and that's the pre-budget rally that's started on 30th of December. So you have SGV and Satluj Jal Vikas Nigam Limited, the top gainer in the NSE 500 basket, 5% higher. Ably, again representing the copper space is Hindustan Copper, 2.5% higher, 555. You have MRPL, and how can PSU banks be left behind? Overbought as far as the broader sector is concerned, but there's no stopping Maharashtra Bank, 2% higher, PNB 2.2% higher, IDBI running up another percent. And the broader markets, despite the Nifty being on the back foot, are in strength. 1561 shares in the green, 865 in the red. So it's an easy 2:1. And apart from the Nifty and the Pharma Index, all 18 indices that we track are in the green, led by the PSU Banking Index and the metal space. Abha.
Okay. Vinny, let's go through some of those financials because it could be indicative of really what to expect from the larger sector as well. We've seen some amount of numbers coming in above estimates. AU Small Finance seeing strong growth. Advances grew 24% year on year versus an estimate of 22%. Bank of Baroda loan growth has also been better than estimated, 17.3% year on year and 4.5% Q on Q. Estimates were 12.6 and 3% respectively, so almost a 30% higher result coming in there. PNB, robust credit growth, 10.98% year on year versus 10.3%. And a Union Bank has seen advances grow better than estimates, also arresting the muted loan growth trend that they were seeing. So these are a few earnings that have already come in. Bandhan Bank loans grew a little lower than estimates, and Bandhan Bank also has, of course, been looking at reworking its books. So I think that's a slightly different story there. But overall, are numbers coming in line with your expectations?
They're in fact better than expectations, and closely mirroring the the kind of cuts that we've seen in the credit. Also, we have to not forget the fact that gold has gone up very aggressively, and it is providing you a very low risk kind of environment for banks to lend. So that is helping the result season. I think this will continue going ahead, and the PSU banks, which have been quite low in terms of their valuations with the larger banks, private banks. I think we will see catch up continue out there. So we like Bank of Baroda a lot, 17% growth with a 15% plus kind of ROE is simply amazing. And I think that this bank can do very well from current levels.
Okay, it's a Bank of Baroda there. That's the pick coming in from Vineet this morning. And good strong gains across broader markets, as Shell was also pointing out. So the index itself is a little flat, but plenty of action across the board coming in on the back of some of these earnings in the banking space, as well as individual movers across the board as well, whether it be something like a Hindustan Copper, as well as a Shobha Developers is up 4%. Let's bring that one up for you as well. Meanwhile, on the downward trend, let's pull up Cupid, because that one is actually slipping. The company has said they're confident of exceeding their FY26 guidance. They don't expect a material impact of tariffs. However, they're actually seeing a complete tumble in trade today, 15% lower, as you can see there on your screen. I'm just trying to pull up what else has come down in the commentary. But actually, they've said they're going to continue to benefit from the prevailing rupee environment as well. What's really happening here? The stock's down 15%. Anything else you're picking up on the commentary, Shell?
I don't track Cupid as such. I really have nothing sensible to say about it offhand, but it's a price action that I'm watching as well. But, if you really want to be on the long side, it is to be in the metal space, whether it's copper, whether aluminium or precious metals, and their equity derivatives. I have no idea about Cupid.
All right, so let's just take a look. We've got a fair amount of weakness settling into this stock. Remember, last week, they did hit a lower circuit as well. They've been placed under a long-term additional surveillance measure, stage 1 framework, so that ASM framework, which involves 100% margin requirements on T+3 days to curb volatility in certain stocks. The margin requirements limit speculative trading and reduces risk exposure in some of these stocks. So clearly, as Shell also said, just stay away from this one for now. Cupid, as you know, manufactures male and female condoms and IVD kits, and at the moment, it's seeing a fair amount of volatility coming in on the exchange. So despite fairly decent commentary, possibly better to stay away from some of these names for now. Vineet, any comments on this one?
I think the stock is massively overvalued. There is very little to portray. PEG ratio is 5.5 times, which is humongously expensive. And I think it's more of a pump and dump operation apart from any fundamentals luring the stock. So I think it's better.
Okay. Come back to Vineet in just a moment, but I think it's pretty clear what he's saying on Cupid as well. Let's pull up Bazaar Style for you. Fair amount of action in the retail segment. We've got Bazaar Style saying that a festive shift has hurt their Q3 revenue growth. They've seen a 13% increase year on year, same store sales growth up about 14%. The stock is seeing a bit of pain this morning. Let's pull that up for you. And they're talking about a festive shift hitting them, and that's down 4%. Some of the others from the retail segment, we've got V2 Retail seeing a 57% year-on-year growth. That's driven by robust store additions, 35 net store additions coming in there. So the cumulative same-store sales growth is of about 10.4% versus, let's say, around a 5% for a V-Mart. Meanwhile, D-Mart has seen a weak revenue print. That's up 13% and low single digits on their SSSG. And V-Mart, as I just mentioned, SSSG is also flat for them. They've also seen a weak Q3 revenue print. Slightly mixed when it comes to retail, Vineet. I want to get your views on that as well, because we have seen some very bullish calls when it comes to selective retail counters, but the numbers currently are looking a little mixed.
I think the companies which are more focused on the sensitive sectors for consumption, they're doing rather well compared to the rest of the segment. Avenue Supermart, I think, is we have a sell call on this stock because we believe that they're not really getting a lot of traction on margins, and we think that the stock is expensive. While it still stays far above our price, I think we are looking at targets of sub 3,300 going ahead.
All right, so that's on retail this morning. Shell, we've been looking, of course, at oil, and Reliance has hit a record high of 1611.8, up over 1%. And this is clearly, of course, the Venezuela impact. Let's pull up Reliance Industries for you. Just in the opening few minutes of trade, we've seen Reliance at 1611.8. That's up over 1%, and that's a new record for RIL.
Absolutely, Abha. I would imagine that in the broader scheme of things which might pan out between 6 months to 1 year later, you might see Reliance replacing its Russian crude purchases via Venezuelan oil. And given the fact that Venezuelan oil would be in the market because of what the US has done over the last weekend or so, global crude oil prices are likely to be under par for 2026, 2027, and therefore higher GRMs for refiners like RIL. We will also keep an eye out on BPCL and HPCL from the Indian OMC basket. They also benefit immensely because of tepid oil prices, which have a trajectory of heading lower. So it's a win-win for Indian refiners and also for the private sector giant RIL.
Absolutely. Just to take you through once again, we've seen, of course, Reliance and ONGC likely to benefit from this shift when it comes to sourcing oil. Reliance may, in fact, get crude now at a discount of $5 to $8 a barrel, and that could boost its GRMs as well. Meanwhile, ONGC may receive up to $500 million in unpaid dividends. So that's the impact there. And Jeffrey saying that the medium-term risk is there on a higher Venezuelan output and, of course, impact on prices. But that may still take a little while. At the moment, we're not seeing any immediate impact. And even OPEC Plus is choosing to maintain its current supply measures as well. Vineet, the closing comments from you. We're tracking the Nifty also now at a fresh all-time high. Nifty Bank is scaling a new high. We've seen momentum pick up just in the last couple of trading days, and today continuing that trajectory. May not be seeing some runaway move on the index, but we are trading at all-time high levels.
Yeah, so I think the metrics from the market are very, very strong given the rate cuts, and they're all playing out. And, we've seen some very strong numbers coming on the economy. So I believe that the market should do well going ahead. Just one caveat is that over the last 3 years, we've been seeing January and February numbers quite disappointing for the markets. So, they could temper a bit, but, overall, I think the structure remains very, very sound.
All right, sound advice coming in there, and we'll keep an eye on every single factor over the next few weeks. Vineet, thanks so much for joining us. And of course, do stay tuned to India Today. We'll also be back with more on the markets at 3 p.m. Thanks so much for watching.